The rule of 72, a crack in Fang, and scalping earnings. What do these three things have in common? Probably nothing, but I'm going to get into them all right now. Hey, Optionetics Power Profit Trade members, Tom Gentile here. Welcome to my trading room. Today, we're going to talk about the rule of 72 and how that applies to the markets themselves. Is Fang overdone? There's a crack in the technology markets right now, and is that going to affect the rest of the month? And finally, speaking of the rest of the month, how to scalp this quarter's earnings. All that and more coming up here in just a moment. Hey guys, by the way, I want to welcome all of our new members. If you like what you see, show me some love and give me a thumbs up below. Also, subscribe to this video and you'll get all of our new ones as soon as they are uploaded. Finally, I've got a free report down at the bottom of this screen. So down at the bottom, if you click on the link, you'll see a free report. It's called The Easiest Options Guide You'll Ever Read. So these are the patterns right now tracking in the month of July. If you can see where we start at the beginning of the month. And what you'll see is you'll see my money counter back here that's either green or red shaded. And then the actual arrows are what the stock market did that particular day. So as you can see, in all but three so far for the month of July, we've been tracking very well, tracking at a 72% rate. But what does the rest of the month show us? Well, let me show you what I found. So in the rest of the month, we've got coming into the last 2 weeks of July, 28 companies reporting earnings, 55, 92, 104, 20. Look at the last week of the month. This is where the swelling really begins. 61% report on the 27th. 465 companies report on the 28th. 318 on the 29th. 410 on Thursday the 30th. And Friday the 31st of July. We end with 262 companies reporting. Now, take that with what the money counter has seen over the last 10 years for the last 2 weeks of July, and here's what we see. We see more bearishness, 68% bearishness on Monday the 20th. We see 51% on the 21st, 64, look at the red over here, 86% of everything we're tracking starts bearishness on the 23rd of July, 66 on the 24th of July, and then the final week of July, we see 69, 79, 70, 93, 85. These are the percentages of stocks that actually have patterns that work 90% or better over the last 10 years. We're seeing 90% historical success in that direction. And if all of this is orange to red, it's telling me that the majority of stocks like to track down during the back half of July. All right? So, a lot of earnings going on and a lot of nervousness going on in those final 2 weeks. Let's take a look at Fang. So, Fang stocks have been under pressure in the last week, and I'm going to start with Facebook. As you can see, this is last Monday. We had a high of 250, and from Monday afternoon to Tuesday morning, we saw a lot of the moves in Fang happen on that Monday, Tuesday time frame. So from here, we went from 250 to 232, and then what's happened is we've come back up, and we've just created this area of consolidation. So as you can see, it's almost a cone effect, or a triangle effect as we get into the end of the week. Here is Apple, same situation, all right? Monday afternoon, $399.82. Tuesday morning, $375.51. And as you can see, hit a low, lower high, higher low. Lower high, little lower low, but again, the same situation is setting up. We're seeing consolidation happening. There's a reason for this. Let me show you the rest of Fang. Take a look at Amazon. Now, Amazon had a down week last week as it melted up to $3,344 before coming back down, and this was Monday to Thursday's low, $29.18. We're talking about a 10% move from Monday's high to Thursday's low, but take a look here. There's consolidation going on in Amazon as well, as you see lower highs happening, and you see really, slightly lower lows, but consolidation from the wide trading ranges we saw early last week to the very thin trading ranges we saw late last week. All right, on to Netflix. Again, Netflix had a Monday morning high of 575.37. Now, its low didn't come in until Friday. And so what we saw here was we did see the big move happen from Monday to Tuesday, but then Netflix tried to bounce back and fell apart on Friday when their earnings were released. Finally, we go to Google. And Google looks like this. High, 1576.36 on Monday. Low, Tuesday, 1485.93. And again, same thing. Big move and then followed by consolidation. Now, what this is telling me is that this group is consolidating for some type of big move, right? And we've seen the melt up come already. Is it possible that now we're going to see the meltdown in technology? And as technology brought stocks up to where they are they going to bring stocks back down? Are they going to lead the pack to the way down? And finally, let's talk about earnings. Let's talk about earnings scalps. So what is an earnings scalp? This is something that my team and I have developed over the last 10 years because if you think about trading earnings, this is the way I used to do it as a novice. I would buy a stock right before earnings and I'd look to sell it right after earnings. And then I did that with options. And that was great in the 90s when it worked, all right? But now we're in a situation where most of the time you're better off buying and selling before earnings than riding all the way through. Most people ride it all the way through looking for a big jump, and of course they have big risk to the downside. But perhaps what we do is look at each earnings season, hunting down opportunities for stocks that tend to go higher into earnings, into their report, or even lower into their report, and we could take it to the downside. So much like a ticket scalper, all we're looking to do is buy those tickets and sell them before the big show happens. And that's what we want to do as an earnings trader. All right? So what we look for is, we look for not price, but we're looking for implied options volatility. Right? So that implied volatility shows us, and this red line are the shorter term options. And we see really about a couple weeks between before, right up until that earnings announcement. So you see big increases that happen time after time after time with typical stocks. Now, some stocks do it more than others. So we want to hunt down the stocks that this happens to the most, find the ones that have had not only the most increase in this particular chart here, but also the most increase in their average return on investment. So let's take a look at trade number one that I have here for you. This is Arista Networks. It was trading around $219 a share. Now, the last three earnings cycles, we've seen a repeated push in this particular chart going higher into earnings. As you can see here, this is the last two earnings. Couple weeks out, we rise in earnings. That means people are buying calls and buying puts with the expectations that Arista Networks is going to move in their direction after earnings. Now, I want to show you something else. Look what happens right after earnings. We see a crush in volatility. In both cases, it happens very quickly, and what happens is the time value on these options, which gets built up right before the report, comes crashing down after the report. So if you've ever bought options before an earnings report and you were right, still lost money, more than likely you lost it because of the drop on this chart here. Now, a couple things that I want to mention here for you. Now, we're looking at an earnings report that's going to happen after the market close on August the 4th. What I also noticed is that of the last three earnings cycles, we've seen this stock go up in price, but we also seen the implied volatilities go up in price, and that has actually created an average return on investment of nearly 43%. Right? Now, I have other information I can look at here too. For instance, I can look at past price, I can look at past implied volatilities, and I've also got the ability to look at earnings beats or misses. Right now, all of this is available at tomsoptiontools.com if you want to do this yourself. But what we're doing here is we're finding a pattern of price and options volatility both going higher. We want to take advantage of that pattern by looking at call options that are just after the August 4th expiration, buying them a week or two before and selling right before that earnings announcement. How about I give you one more? Okay, this one is a pattern that we found that typically goes down into earnings, and that is, believe it or not, public storage. Public storage is one of those buy the rumor, sell the news categories where $192 stock, last 3 earnings cycles, what's happened is, although the volatility goes up into earnings, and it went up into earnings here too, the price has actually been going down into earnings. So people have been selling this stock off a week or two prior to the earnings announcement. The earnings announcement is going to be after market close on August the 5th. So we want to get ahead of this one by buying put options that have at least an August 5th, if not later, expiration date. And then the whole idea of an earnings scalp is to buy before the earnings. So you want to be in as the chart is going, this particular chart's going up in value. And then you want to sell and you want to get out right before the earnings announcement. Because if you're in when the earnings announcement happens, then you could be a victim of the drop in option premium. How has this pattern done in the last few earnings cycles? Well, I can tell you this. The average implied volatility has gone up about 20%, but the average return on investment, 51.6. Couple things I've seen here. 4 of the last 5 quarters, public storage has gone down prior to earnings. 4 of the last 5 quarters, the put options have gained value. And 4 of the last 5 quarters, they missed on their earnings report. So, hope you enjoyed this video, guys. Like I said before, if you like this video, show me some love. Make that thumbs up turn blue below us. And if you subscribe to our videos, then you'll get them as soon as we upload them. Thanks again. Hope you enjoyed it. We'll see you soon. Bye now.